Yo, what is good with you guys? Day 2 for my swing trading school. I hope you guys are enjoying this so far and you watched day 1. Hopefully you got your journal. Hopefully you are locked in, guys. This is going to be a really good program, really good course, and I'm just excited to teach all you guys and excited to bring you along my journey of swing trading and investing. So I want to get straight into it. I want to talk about day trading versus swing trading. I want to talk about swing trading. I want to talk about the contracts that I've picked, people I look up to. Today's video is just going to be about swing trading and why I personally like it and why it fits my goals. So let's get straight into it. Day trading versus swing trading. What do I like about it? What do I not like about it? So day trading, a lot of the times you're going to be glued to your screen all day, right? You're going to be chasing every little move, minute by minute, high stress, high emotions, and easy to overtrade, right? When you're day trading, you can go back and forth and overtrade and continue to trade random setups in your mind because you think there's opportunities to make money, right? There's a lot of small wins, but it's hard to catch big trends. So with day trading, a lot of it is scalping or back and forth, one-to-one risk to reward, you know what I mean, movements. And it's super hard to create generational wealth doing that and create huge gainers by just day trading. Is it possible? 100%. But it's hard, it's overstressful, and it's just, you know what I mean? You're going to get burned out. So, like I said, most people get burned out doing it long term because it's very stressful. Now, swing trading, right? This is why I love swing trading. I've been working on this all day for you guys. Swing trading gives you the freedom to live life while still trading. You don't need to be on the charts all day. You don't need to be checking your phone every 2 seconds. Swing trading is more of a mid-term play, not a long-term investment, but not a super short-term investment. You are trading within weeks, days to weeks usually, maybe even a couple months. So it gives you more of a relaxed feeling. You can let your positions play out, and it's way better, right? There's less noise, less stress, more clarity. You take fewer trades, but those trades that you do take are huge, high quality setups. Now with day trading, a lot of the times people overtrade, people take unnecessary trades that don't even meet with their criteria or their strategy because they try to make money quick, right? Day trading is a very shiny object, right? You think like day trading, I can keep trading it during the day and just make this win and then trade this and then do that, and you're just trading a bunch of random noise, and it can really hurt your trading, it can hurt your discipline, and it makes you super stressful. So with swing trading, you are taking less trades, but those trades are A plus 5-star setups that can go super far and give you a big return, which is really good. The next thing is basically what I just said, you know what I mean? Catching huge moves, right? So even 50 to 500% moves usually. Usually the first day or two, you're usually looking at like a 30 to 100% move potentially if the stock starts breaking out and if it looks really good. And also, another big thing that I like to talk about is breakouts and swing trading is proven by the best of the best traders. You'll never see a 40, 50, 60-year-old competing in the USIC or in any trading competition or any trader that's making generational wealth. You're never going to really see him like day trading back and forth. Yes, maybe there are some here and there, but the best of the best traders, the ones that you're going to see on Wall Street, the ones that you're seeing in the USIC, the United States Investing Championship, those guys are all swing traders and long-term investors. And I think it's very important to realize you want to copy the best of the best. You don't want to do what's shiny on TikTok or what's shiny on Instagram, right? You want to do and kind of recreate, not even recreate, just redo what the best of the best were doing. You know what I mean? It's just simple. Why would you try to make up your own jump shot when you can, you know what I mean, take LeBron's jump shot? His shit's fire. I'd rather take LeBron's, right? That's the point that I'm getting at. So it's proven by the best traders. That's why I personally like swing trading. It's easier to stay disciplined and build consistency. And the biggest thing is over time, it builds real wealth so you can actually compound an account. Day trading, a lot of the times, you'll get undisciplined. You'll go back and forth. You can't truly compound an account consistent over years and decades, right? I think swing trading and investing is the way to go for that. But also, guys, for any of you day traders or any of that maybe you want to day trade and not swing trade, this is just my humble opinion, and this is why I'm making these videos, to put my opinions out there. So the next thing I want to talk about is my 2 biggest inspirations in trading. Now, it's Christian Qualamagi, which is on the left. He is a swing trader that trades breakouts. he is the best, like literally one of the best. I recommend everybody to watch his videos. He is one of my biggest and most like just biggest inspirations. People think like LeBron is their inspiration, Kai Cenat. This is my fucking, you know what I mean, mentor. This is my inspiration. Christian Qualamagi, one of the best you can do his research. And then also Mark Minervini. I have a lot of Mark Minervini books. I always recommend everybody to watch Mark Minervini, read his books 100%, just so I can be transparent. Where's it at? So it is right here. This is one of my favorite books by him for mindset. You can take a screenshot if you'd like. Amazing books. Right? He has amazing books. He has amazing podcasts. 100% recommend you to watch him. He is 100% an investment champion, registered by the SEC, and all of these are real returns. Obviously, you can see 334% return. That's insane on an account. Like if you have a $1 million account, you can do the math on that, on how much you're making on your account. So insane results. These guys are beast investors, and these are the types of guys that I look up to. Also, another one is Dan Zanger, if you do want to look him up, and Jesse Livermore. These are all top tier traders that are all over 40 to 50 years old. I don't really look up to any of these like Instagram, freaking TikTok traders that are 17 years old passing their funded accounts, right? There's absolutely no reason why I would want to represent what they're doing. I'd rather do what the best of the best are doing, and I'm all for that. So the next thing, swing trading fits my lifestyle and my personality, right? I like the structure, I like the planning, and I like patience. I don't want to be on here stressed every day, a 0 DTE position going back and forth, like scared, like, oh my gosh, I'm up 20, now I'm up 100, now I'm down 500. It's like day trading is super, super fast paced, and it's hard to stay patient. It really breaks your patience and breaks your discipline. So I like to stay patient, I like the planning, and I do like the structure. I don't want to be chained to a screen every day, and I don't want to just take setups that are super random, right? I want to take setups that are AA plus, that can build my account. I think that's very, very important. You want to take the setups that can compound your account over time. You don't need to take 5 trades a day, 3 trades a day, not even 1 trade a day. Sometimes you could take 2 trades a week, but those 2 trades can be home runs that absolutely rip. So that's exactly why I like swing trading. So yeah, I like the freedom, and I like to step away from my screen, right? I like to step away, and I like to be in those great trades that can make me a great amount of money, and I don't even have to look at my phone every 2 seconds, every 5 minutes. You know what I mean? So it's a great way to be able to stay more patient, build your discipline, build your, you know what I mean, your stress levels back. Because if I came from day trading, so like I used to be stressed with 0 DTEs and all that stuff, and now I'm swing trading, a lot less stressful, a lot better in my opinion. Now, the next thing is, it's not about being busy, it's about being consistent and profitable in swing trading, right? It gives you that balance while you can build wealth and then also still be consistent and still be able to live your life. So hopefully that makes sense. I personally think swing trading fits my personality. Some people like scalping, some people like Forex, crypto, OnlyFans. I don't know what you guys like. I like swing trading. That's why I'm making this video. So let's run it the freak up. Now, if you are very, very, very new to options, right? Because some people don't even know what options are. Watch this video, watch this course, but on your free time, I 100% recommend you to deep dive into like an options YouTube video from a 50-year-old that can explain it. They will explain it in depth. They'll go over 2 hours of exactly what options are. Me personally, bro, I'm tired of teaching that shit. I'm just being completely honest. So I don't really want to teach the exact definition of options and the options chain. I'm going to help you out a little bit in here, but if you are like an insane beginner on options, watch the very, very basics and then come back to this. But if you already know what options are and you know how to trade and you're just trying to look for a winning strategy and watch this course, bang, this is for you. But like I said, go watch a regular options video if you don't know anything about options. So this is how I pick my options contracts, right? When I'm swing trading, I pick out, you know what I mean, weeks out, maybe even months out options contracts. I think that's very important to understand, and that's what we're going to talk about right now. So how do I pick my contracts? I usually go 1 to 4 weeks out, depending on the setup, obviously, and also depending on the market conditions. That's very important. A lot of people don't talk about that. You're not going to take the same expirations in, you know what I mean, a consolidation market, right? Because sometimes if we're consolidating and we're not ripping, it's hard for breakouts to work as best as they would if we have a market that is ripping, right? So sometimes if the market is consolidating a bit more, maybe I'll take like a breakout with a weekly contract so I can have a bigger return quicker, so I can secure those gains. Because if you're not seeing a ripping market, there's a less of a chance for the stock to actually follow through and keep going. So it really depends. But in a bull market, you know what I mean? That means the stock market is continuing to go higher. So sometimes I'll take 2 weeks to a month out contracts to hold that position within that time to capitalize off of those gains. So I usually pick 1 to 4 weeks out. I buy contracts slightly out of the money for bigger upside returns, right? So when breakouts, out of the money contracts, number one, you're not paying a high premium for it. So you're not paying a super expensive amount for that contract. Plus, out of the money contracts run quicker and the percentage gains are way higher. So I pick out of the money contracts. Let's give an example. Let's say Tesla is at $300 and we're getting a breakout. I'm going to take the $305 calls instead of the $299 calls or the $300 calls. Usually I'll go 1 to 2 to maybe even 3 out of the money. So hopefully that makes sense. The third thing, I always check volume in these contracts and open interest. This is very important. The volume is going to show you how much volume is in a contract, how many people are holding on to these contracts. Is it a dry contract? Is anybody even buying these? Can there be a big return out of these contracts? It's a very important thing to look for, right? And then open interest. You want to see if people are actually holding them, right? So you have to see if people are actually interested in this certain contract with certain expiration. If nobody is holding on to those stocks, guys, or those contracts, the stock option is probably not going to move, right? So hopefully that makes sense if you even know what volume and open interest is. If you don't, like I said, please go check out a beginner options video and then come right back to this course. So yeah, I think it's very, very good to check for volume and open interest because when there is volume, you know what I mean? That shows you that people are buying and selling these contracts so you can actually get filled. If nobody's buying the contract and there's no volume, it's like if you sell it or if you buy it, there's not a chance that you're going to get filled or it's going to be a bad fill. So I want quality contracts, not just cheap, shitty contracts, right? I think it's very important to understand that. Now, the last thing with the contracts, I personally go into these contracts and I put size based on my risk, right? So I have a certain account. Let's say my account is $10,000. I'm going to put X amount into this trade because if I lose 20% of this trade, this is the X amount that I'll lose. Does that make sense? I don't go into these positions and buy shit just because I'm like, oh, I need to get in. I think I can make money. So I'm just going to buy a random amount of contracts. That is not a strategic and a systematic approach to trading. I think it's very, very important for everyone to realize that risk management is the number one most important key factor in your trading. And if you do not focus on risk management and risking properly, you'll never make money. If you get greedy and just want to get rich quick and you're overly sizing in these contracts and these trades, yeah, you might get lucky one day, you might hit a big gainer and you might start winning, but you're building bad habits and that's not going to work long term, right? This isn't a get rich quick thing. This is a long-term strategic, systematic approach to trading and investing to build wealth. And that's something I've realized over my years. So hopefully that makes sense. You have to size accordingly to your position size. Obviously, I'm not going to go in that today with position sizing because that will be another video. But I think it's very important for you guys to realize that. Now, here is the options chain. This is the stock Tesla, right? We just traded this stock. I traded this for about 700%. Up about $30,000 on the month or whatever it is. I forget. I have to check. But I'm up big on Tesla. Like, absolutely fucking rip this shit, bro. Like, insane gainer. I'm not going to edit this like crazy and put it on here. You'll see it in the Discord or you'll see it on my Instagram. You've probably already seen it if you follow me. But insane rippy on Tesla. Actually, let me go to... I want to prove y'all, boys. I want to show y'all that we take this shit. I'm not just going to say I take some shit. Bang. Look at this breakout right here. Beautiful breakout literally as I'm... making this video. Still in the stock, by the way. So we took the breakout right here, still holding it all the way up here. It's been 1, 2, 3, 4, 5, 6, 7 days. So it's been a long time, still in the breakout, made a lot of money off this breakout. So you can see Tesla, here is the options chain. Now the reason I'm doing Robinhood is because I personally use Robinhood. I use Webull a little bit here and there, but I'm mainly placing my trades on Robinhood. So when you are clicking a stock, let's say we're trading Tesla for today, this on the left side is what is going to pop up, right? You're going to see this. This is the options chain almost before the options chain. So you're going to click on it. You're going to see all of these dates up here. What these dates are expirations. Most of you guys know that, but for the people that do not know that, these are expiration dates, right? So when you are buying options, these contracts have expiration dates. It's not like shares where you can buy and just hold on for it forever. That's not how that works. You have expiration dates on this. And I think that's very important to understand, because as the expiration or as the contract gets closer to the expiration, theta can start coming in, which is time decay. That can eat up your contracts, right? That can make your contracts go and start devaluing, or that's not even a real word. They start to devalue, I guess. I don't know, I'm retarded. I graduated with a 1.8 GPA. Don't matter though, because we're about to get rich in the market. Point is that the contracts devalue over time when they get closer to the expiration. So yeah, very important to understand which contracts you're picking when you are trading these breakouts. So you can see this is the expirations up here, right? So we have, what's the date today? September 21st. So like next Friday will be September 26th. The Friday after that, October 3rd, then 10th, then 17th. So you get the gist of it. You know what I mean? This is the options expirations. So let's say you pick October 3rd. Bang. Now we go over to the right side of the screen. See, October 3rd is highlighted. These are the October 3rd contracts. So what does that mean, guys? That means that if you were to buy one of these contracts, they expire at 4 p.m. on October 3rd, 4 p.m. Eastern, right? Because that's when the stock market closes for Eastern time, 9:30 to 4 p.m. So your expiration, when it does end, it closes at that time, right? So 4 p.m. on October 3rd, that Friday, that contract will be worthless. Like you would have to sell it or it'll sell itself and you'll be out of that contract. So you want to make sure that you're capitalizing off that before the expiration ends. So that's exactly why we do pick 1 to 4 weeks out, because when we are picking contracts like that, it really shows you, okay, we have 4 weeks or we have 2 weeks to capitalize off of this breakout. Let's see if it plays out, right? If it's holding the moving averages, if it's looking good, you're going to hold the stock. If it doesn't look good and it starts to stop you out, you exit the stock and you take your loss. Very simple. So you can see these are the expirations over here, right? October 3rd, bang, we click that. Now this is the options chain, right? We're going to go over this, and Tesla is a more expensive stock, especially since it's pretty high up, like I showed you guys. Like this was literally yesterday. I took this screenshot on Robinhood. Tesla's super, super high, pretty extended, so the premiums are they're gonna be up there. You know what I mean? The options contracts are gonna be pretty expensive. So you can see this is the options chain. This is out of the money right here, and this is in the money. This is calls, this is puts. If you don't know, puts is when the stock is going down and you're betting on the stock to go down. You're capitalizing off of a move when it goes down. Calls is when the stock goes up and we capitalize off of the stock going up. I rarely take puts, especially in a bull market. I'm only taking puts in a bear market usually when we're below the moving averages. So yeah, you're going to be clicking calls, obviously, making sure it's on buy. You're going to realize this right here is the share price, 425.50. What that means is the stock is currently sitting at 425.50. If we go to Tesla, go on like a 15-minute time frame, if you see, what does it say over here? Tesla, 4.2550, right? So it shows you that the stock is at that share price. So you're going to look at this to always understand and get a gist of what is the stock going for right now. What is the stock currently at, right? This is the share price. So what would be out of the money? Out of the money would be 427, 430, 432.5. You see up the board, up the options chain, that's out of the money because we're currently sitting at 425. So are we even at 427? Right? Are we even at 430? No, this is out of the money. And this is what we're aiming for. These are the types of contracts we are picking. We're picking out of the money because we're looking for the stock to break out and then to go to those targets like 430, 432. So we're picking the out of the money contracts. The percentage gains are way higher on these contracts. Plus, they're cheaper, right? So you can get more of them if that makes sense. And this is in the money down here, right? So if we're at 425 and we're looking for calls, we're already at 425, 422, 420. These are down here. So these are already in the money. More expensive contracts, more safer, and you know what I mean? They're not going to run as quick. So hopefully that makes sense. This is the options contracts. Like I said, picking 1 to 4 weeks out for the most of the time. And yeah, I hope you guys are understanding that. I'm not gonna lie, dude. Like, I'm a 21-year-old kid. I'm not gonna bring age into this shit because anybody can be smart. But I'm kind of dumb when it's time to explain the beginner stuff. Does that make sense? I'm more of a technical and psychological trader. Like, I'm good with charts and shit. But with this, like, techie freaking numbers and shit, hopefully you guys are understanding me because I graduated with a 1 GPA. But guess what? This to my teachers because they told me I was going to work at McDonald's. Frick you, old English. No, I'm just kidding. I wish the best for you. But there was doubt in me. So don't let anybody doubt you if you're trying to become a stock trader and if all this shit is hard and if this sounds hard and if this is risky. Fuck them, man. Let's achieve our dreams. Let's make $1 million in the stock market this year, baby. Let's go. Let's get active, baby. You watching this course. Let's go. You better have a coffee. Look, I got a Celsius, man. Let's lock in, baby. Y'all better become rich as fuck, bro. Let's go. Let's lock in. Fuck the doubters. Sorry for my language. So, let's get into why breakouts are better than ICT. If you don't know what ICT concepts is, it's a concept that is made up on the internet, on TikTok and Instagram for the most part. And it's a newer strategy, right? It's a newer, shiny, overcomplicated strategy that a lot of traders like to trade, including myself. I used to trade it when I first started trading before I started studying breakouts. Now, it's way too overcomplicated, and I don't think it's secure for the long term, but that is just my humble opinion. Let's get into why I personally like swing trading breakouts instead of ICT. Number one, breakouts are a very simple, repeatable rule and strategy that you can use for years, like years and years and years. Number two, it is proven by the best traders in history in the USIC, like Minervini, like Qualamagi, like Zanger, like all of these big, huge USIC traders that are compounding their accounts, making millions and millions and millions, right? They're taking that on breakout systems, right? Now, with swing trading and with trading breakouts, it lets you catch big trends and you can actually compound your account, right? So you're catching huge percentage gains, and it's not like you're just getting lucky. You have a super, super systematic approach that can have you catching these big gainers. Hopefully that makes sense. And then it's easy to execute once you really know these patterns and they repeat over and over again, right? Like when you see a breakout, it can't be that hard. You just have to understand what a good breakout is and what gives you the criteria for a good breakout. And that just takes time and practice, right? Now, let's get into ICT, right? Super overcomplicated. So many moving parts. So many random made-up strategies. So much stuff that doesn't even make sense, right? Number two, it makes you feel smart. When you say I trade ICT, SMC concepts, all this shit, right? You feel smart in the moment. You feel like cool, but it doesn't give you a system for your long term. It's not giving you something where you can have an approach for the next 50 years to retire your family, right? It's just something, like I said in the third one, that looks good short term, but it won't stick with you for years. So it sounds good now. It's super shiny. It's smart, but it doesn't even make sense, right? Now, the last thing that I think that I stand by is there is too much theory behind it, but not enough real results by the top of the top traders. You will never meet someone on Wall Street that trades ICT or on a funded account. You'll never see a USIC trader trading on a funded account. If you even said I trade ICT on a funded, they will laugh at you. Like straight up laugh at you. No joke. Like that shit is not going to make you generational wealth. That's why we are focusing on swing trading, investing, and compounding our accounts so you can actually get consistent and make money every single month without being stressed every single month, without having a bunch of rules and a bunch of complicated theories and thesis with ICT and these damn funded accounts. Too much rules, too much complicated BS, right? And I think you need to understand that. So that's the rest. Wrote all the stuff down for you guys. I think this video is pretty good. 24-minute video. The last thing that I do have for this video is just keep locking in, man. Super proud of you guys. I think that you're going to do really good with swing trading. I'm proud of you if you're even watching the second video. Now, this is basically the first video of teaching. If you're still watching to the end of this video, I want you to put in the comments, I am locked in, right? In all caps, I am locked in. I want to see who's actually locked in, like deadass, who's locked in. Or type in the comments, I will change my life. I will become profitable. You have to manifest your goals. You have to want it so bad to the point where you're willing to just, you need to type it out, right? I have a journal. Where's my journal? It's in the kitchen. But the point is, the journal, I write down every morning, I will have a Lambo. I will be a profitable trader. My portfolio will be at $1 million. I will inspire people, right? So I write down my goals every single day. I will retire my grandma. I will get my grandpa a boat. All these little things, but I say it and I write it down, and I think that's very important for you guys. Write your goals down, keep working, and listen, bro, you're on the second video, bro. I'm not going to lie. I don't believe in you at the moment, and I'm not saying that in an ignorant way. Bro, it's the second day. You know what I mean? You could have motivation right now. I'm going to start watching Johnny's course, and by the 7th day, you could be like, oh, man, I don't feel like it. Or you have some excuse. You're doom scrolling. You're back to smoking. You're drinking and just not locking in. Let's see who comes out of this. And I'm going to say this, and this might sound harsh, but let's say there is 1,000 people watching this video. Statistically, it sucks to say this, statistically, not even 10 of you guys will become profitable. Isn't that crazy, low key? About like 1 to 5 people out of the 1,000 people that are watching this will become profitable. And that's not me saying that. That's just statistics. Everyone quits trading. Everyone, you know what I mean, complains and overtrades and doesn't have discipline in their actual life. They don't keep going forward with their trading, and they fold. They quit. They get down in a hole and they don't know how to dig themselves out. So let's see who's going to become the profitable traders out of this course. Let's see who really is going to make it. Because I promise there's only 5 to 10 people out of the 1,000 that will most likely become profitable. They say 99% of traders fail. 90% of traders, whatever the number is. It's insane though, because it's true. And it's not that people are uneducated or people are just a bad trader or they're just not fit for it. No, it's just they don't have the discipline. They don't have the dedication. They don't have a passion for this trading shit. So I hope that I can help you build a purpose, build a passion, because if I can come from a depressed kid that was selling weed, lost his parent, you know what I mean? Coming from not the best childhood to now where I'm at, doing what I love, making money in the market consistently. If I can do it, there should be absolutely no reason you can do it. Remember, nobody cares about your sob story. Get to work, and I want to see if you can be that profitable trader. Let's see. 1,000 people watching this, 10,000 people watching this, 20,000, whatever it may be. I want to see if you got this shit. So let's keep grinding. Make sure to put in the comments, I am a profitable trader. Let's freaking get it. Join up on the free Discord. We do classes every single Sunday. Every single Sunday, we do classes. Free classes, free watch list. I help traders. I answer questions. It's a complete free Discord. Join up. Link in the bio. Let's crush it. Love you guys. Peace out. Let's get it.